So we've talked a lot on the show about the falling price of oil and how bad things were for the oil industry even before the pandemic. And lockdowns and border closures have obviously made things much worse because the demand for oil has dropped by so much. Last week, you might have heard that oil prices dropped to below zero.
It is an unprecedented drop. The price for West Texas Intermediate oil opened the day near $20 per barrel, and then it went into freefall, dropping more than 300% to close at nearly negative $38.
And oil prices dropping isn't surprising, but no one expected prices to go into the negatives.
We've never seen anything like it before.
Yeah, I laugh because it's just unprecedented. It is unprecedented.
If you were confused by this, you weren't the only one. A lot of us were asking what this even means and wondering if this is what oil prices are going to look like going forward. Today, I'm talking to Global BC's Legislative Bureau Chief Keith Baldrey, and he's going to take us through how this happened, how the pandemic is already hitting Canada's oil and gas sector, and what the future holds. I'm Tamara Kendacker, and you're listening to Wait, There's More. Hi, Keith. Thanks so much for doing this. Welcome back to the podcast.
Great to be here.
So every time you've been on this show, we've talked about some new blow to the oil and gas industry. Now we're in the middle of this pandemic. It's putting even more pressure on this industry. And we've seen this massive drop in oil prices. And that's what I want to talk about today. But this was a little bit confusing for me to understand. So I'm hoping we can start with a really basic question, which is, how are oil prices determined?
Right. So oil prices are largely set by futures contracts, and those are done on commodity exchange floors by traders. You're sort of betting on what the price is going to be down the road, and you enter into a contract to either receive that product at a price that both sides agree is what it's going to be at, or you're going to sell that product at that particular price. The way it's structured is we have benchmark prices set, where everyone agrees to basically go by that price. In North America, the bench price is West Texas Intermediate crude. And traders bid on that price for that product, generally month to month. The international price is set by Brent crude, which is reflective of oil that comes from the North Sea. And that's more of an international price. The futures contracts, as I say, are set largely month to month by these traders. And what's happened, I don't want to use the sort of trite phrase perfect storm, but that's what we're in. So what you had back in March was OPEC, the Organization of Petroleum Exporting Countries, get into a fight with Russia over the oil supplies.
And with no one using those planes, trains, and cruise ships, the demand for fuel has plummeted.
That, in turn, has put downward pressure on oil prices. Now, Saudi Arabia wanted to keep oil prices up by cutting back on production, but Russia would not go along. And so Saudi Arabia decided Sunday to slash its oil prices, betting that Saudi Arabia could stand the pain of lower oil prices longer than Russia could.
Back in March, OPEC, led by Saudi Arabia, tried to cut a deal with their countries to curtail production. Russia said no to that. Russia's a key partner in this. And in sort of a retaliatory fashion, Saudi Arabia, led by their crown prince, decided to greatly increase production and thought this was, he was going to corner the market or somehow punish Russia. And that didn't happen. It backfired with him. And therefore, he flooded the market at the worst possible time because he flooded it when suddenly demand for that product dropped significantly. And so his ploy, really, the crown prince's ploy, was just backfired on him. So suddenly we had a flood of oil on the market just as the pandemic began.
So the price of oil was already low for a number of reasons before the pandemic. We've been talking about this for months. So there had been an overall drop in the demand for oil. There were already growing fears of a global recession. You just mentioned this glut of supply and how there's way too much supply of oil right now because no one's using oil during a pandemic. Tell me a bit more about that. What kind of impact has the pandemic had on the consumption of oil?
The pandemic has greatly curtailed the consumption of oil and the dependence on oil in so many parts of our lives, whether it's literally driving, we're not driving as much, but so much of the economy has been shuttered that it's just not consuming oil to anywhere near the degree it was a few months ago.
Planes aren't flying, less cars and trucks are on the road, and fewer trains are on the tracks, meaning fuel production outweighs demand.
Meanwhile, even though just recently production has been a little curtailed from Saudi Arabia, for several weeks, the amount of oil on the market continued to balloon. So you had supply go up significantly and demand go down significantly. And what you've got now is a glut of oil on the market, and there's no place for this to go. Because again, there's no prospect that the economy is going to ramp up in any significant way for any time soon. So this glut is sitting there. There's no place to put it. A lot of focus right now is on a little town in Oklahoma that nobody pays much attention to, but it's critically important right now. It's called Cushing, Oklahoma.
The main U.S. storage hub at Cushing, Oklahoma is almost brimming over with unwanted oil.
Crude stocks are so high that there's no storage, and there's no storage available at Cushing at any price.
Less than 8,000 residents, but that's where the vast majority of oil is stored, and they're at capacity, and there's literally no place to put this stuff. In fact, super tankers right now are being rented as storage capacity, and they're floating around the oceans right now where a lot of the oil exists right now because there's no place to put it. It used to go from $20,000 a day to rent a super tanker to now $200,000 to $300,000 a day to put your oil in these super tankers and just have it travel the sea. So it's literally an oversupply problem right now and a crushing blow to demand because people just aren't driving. Manufacturing plants are shuttered. You just don't have the consumption of oil right now, and that's playing havoc in the markets.
So last week, this crazy thing happened where the price to deliver West Texas Intermediate crude, which is the benchmark price for North American oil prices, dropped to below zero for the first time ever. So we saw negative oil prices. What does that even mean?
That's a good question. It's kind of an esoteric thing, but it literally means that it's worth more to people to pay someone to get rid of their product than to keep their product. And so the futures contracts arrived at a time when no one wanted the oil, and there had to be a place to put this oil. And so the oil is literally being given to people almost, more than free. People are being paid to take oil off the hands of the people who bought the oil at a set price that was set some time ago. So the price, because it's set in the future, has created this crisis because the price is just not reflective of what the demand is right now. And it's akin to, say you're downsizing in your house, you're moving in from a big house into a condo and you've got to get rid of some furniture. And suddenly nobody wants that furniture. And you're literally in a position to say, I'll almost pay you to take this furniture off my hands. And that's why you've got the negative numbers now in oil, where producers are literally trying to get people to take their supply off their hands because they have no place to put this oil.
If you wanted to, you could buy a barrel of West Texas Intermediate for about $18. And yesterday, the producers would sell you or would give you $37 to take it off their hands.
And so you've got oil now below zero on the May futures contract. And so it's an extraordinary situation. My understanding is that it's such unprecedented territory that the technology used to determine this actually had to be refitted because they never had negative numbers before. When you think of this, like you had to rejig your computer to allow a negative number to show up on these trading floors. And again, it's because the cost of keeping this product, this oil, and storing it exceeded potentially what it cost you to get rid of it. And so therefore, you had those negative numbers.
There's this one economist who described this selling off of futures contracts and the scramble to get rid of them as a hot potato being passed around between traders. So whoever gets stuck with the hot potato will be stuck with thousands of barrels of physical oil and nowhere to put it, which will get expensive very quickly.
That's a great analogy, actually. Who holds that hot potato last is going to get burned. And it's literally passing this storage problem from place to place because nobody's got the storage capacity, and it costs money to create that capacity. And that cost exceeds what you're going to pay someone to take it off your hands. So that potato gets passed around at a fairly rapid rate. Costs are incurred as that hot potato keeps going around and around, and whoever gets it last is going to pay a bigger price than the people who held that potato before.
We'll be right back. The day after the oil prices went negative, they did go up to about $17 a barrel. This is really low considering that prices last year around this time were about $60 a barrel. So what should we make of that?
Well, bad news. There was a lot of speculation last year by oil analysts that there'd be a lot of grief if oil were to dip below $50 a barrel. That was seen as bad territory to go into. Nobody saw us getting to zero or less than zero or even $17 a barrel. That's just, again, uncharted territory. So if the assumption is that $50 a barrel is sort of the make or break even point for a number of producers, $17 a barrel shows you just what type of prices we're in. And there's no prospects, looking at some of the estimates of what the futures contracts would be for the coming months, none of them have oil over $30 a barrel. So that $50 a barrel benchmark seems to be way in the distance in terms of attaining it. Nevertheless, there's a lot of analysts who think that we will get there at some point. There will be a rebound. It's just not going to occur for some time yet. We're going to be in this world of hurt for a significant period of time, whether it's the oil industry, whether it's other industries. This pandemic, because it comes in waves, is not going away, and it's not going to go away for at least a year, which means we're in this time of uncertainty and turmoil for some months yet.
So Canada's oil and gas sector was already struggling, and our oil was already selling at a discount because we're landlocked and it's more expensive to transport oil. So how does something like this price drop impact our oil producers? And what have you been hearing about how this pandemic has impacted the sector here?
Well, like we discussed on a previous podcast, the future of the oil sands is very much in doubt or in question in terms of new projects. There's little likelihood we're going to see new projects of any significance be created in the oil sands or in Canada when it comes to oil production for quite some time. This pandemic, in conjunction with the oil price crisis, is constricting project development going forward. Now, current projects that are continuing to produce oil sands products in Alberta will likely be okay for some time, although they are dependent on getting that product to market. And now that product is sort of shackled to getting there because there's not as many lines of production to get to that market. Trans Mountain Pipeline is now being constructed. The second pipeline is underway, and that will alleviate the pressure at some point, but we're not there yet. So long term, the prospect of new oil projects in Canada being created seems to be very, very low. But existing projects may be able to sort of continue along with their production. But it's the growth in that sector which is the real concern for particularly Alberta, where it's so dependent on that one sector for revenue in terms of government to fund services, that it's a very bleak situation, which is why the pressure in Alberta to find other industries to be dependent on is increasing in pressure quite significantly. So far, no signs that Alberta is quite willing to do that. I think there's probably an unrealistic expectation in Alberta that everything's going to bounce back and everything's going to be fine again, and that's not going to happen. No analysts I've seen is suggesting rosy days are ahead for the energy sector for quite some time. Eventually, we will get to the point where oil will bounce back, likely as consumption does increase when our economy starts to breathe again. But again, we seem to be a long way from that. So it's a bleak days for Canada's oil sector for, I think, a number of months.
Yeah, you mentioned this sort of unwillingness to talk about transitioning in Alberta. I know Jason Kenney's come out really strongly against even talking about that right now. So he was asked a few days ago about possibly working towards a Green New Deal. I think a reporter asked him this question, and he pushed back pretty hard against that line of questioning.
When you talk about the Green New Deal, listen, our focus is on getting people back to work in Alberta, not pie-in-the-sky ideological schemes.
Are these conversations happening in a more urgent way right now in places like Alberta about transitioning away from oil and gas? Do you think that this could be the turning point, or are people just worried about surviving this rough patch?
I think the pandemic presents such a turning point on so many fronts and an opportunity to change, whether you like it or not, consumption patterns and behaviors. I'm not sure Alberta can stick to its position. We're all in 100% on oil and gas. This is, over the short term at least, that's just not going to get it done. He lashed out at that reporter who talked about a Green New Deal, that somehow that was offensive almost.
I mean, that kind of question in the middle of an economic crisis from a Calgary-based media outlet really, frankly, throws me for a loop.
But I'm not sure Alberta can stick to that position. Governments at all levels have to start thinking in new ways. And it's not just about oil. It's just about behaving in so many different ways in such a profound fashion in our society. So you're going to see governments by necessity having to change their patterns and having to change their revenue streams. Oil and gas is not going to be a major revenue stream for the Alberta government for some time. So his budget that was introduced just a couple months ago was based on West Texas crude being, I think, somewhere around $50 a barrel. Well, those days are over for some time. And so his budget, the main underpinning of the Alberta budget, is gone. And how they can stick to that position in the somewhat vain hope that it's going to return to $50 a barrel within the fiscal year seems somewhat silly. Alberta, again, there's been from time to time as Alberta goes through some of these fiscal challenges, the only province that doesn't have a sales tax. And whether or not that forces Jason Kenney and the Alberta government to revisit that sort of cornerstone of every other provincial budget of a sales tax is going to be interesting to see whether they actually move there. But Alberta's in a unique situation with its whole dependence on one industry like this to a degree that few other provinces have is challenging for them. And they're going to have to rethink, I think, their basic philosophical tenets when it comes to how the economy is shaped. Other provinces are going through all sorts of things right now. They're changing their view of how the world works. And Alberta's going to have to do that as well. Governments right now are seen, viewed differently than they were viewed 6 months ago. They're now viewed as agencies that have to help people, have to help individuals and businesses to literally get through this crisis, to literally survive. And that's why you see everyone running up huge deficits as if it's just a walk in the park, that nobody really questions these deficits anymore because the money is needed to get out the door. And it runs counter to the thinking of these governments right across the board for years. But it's demonstrative of just how there's a new way of thinking right now. And Alberta, I think, has to figure that out, that they have to get away from this view that oil and gas is going to rebound magically and help them out in the next year, because that's just not going to happen. My rule of thumb in covering this pandemic is no one really knows what's going to happen next. This is an evolving situation. We are going to be in a world of pain. But in terms of individual sectors coming out of this pandemic, they're all going to behave differently. And it will be interesting to see whether this pandemic has sort of a life-altering impact on things like the consumption of oil. People are not driving as much right now and they're not consuming as much. So does that behavior remain with us as we come out of this pandemic, or do we go back to the old ways of behaving? And does that mean that we will go back to consuming oil in a way we used to consume it before the pandemic began? If we do go back to that, that's good news for the oil sector. But if we don't go back to that, if this pandemic does fundamentally alter our behavior and our consumption patterns, that has a profound impact on so many industries and sectors, including the oil industry. And that may be just a pivotal point in the history and the evolution of our consumption of fossil fuels.
Okay, Keith, thank you so much for explaining all of this to us. It was really interesting. I appreciate it.
All right, anytime, guys. Take care.
All right, that's the show. Thanks so much for listening. If you want to get in touch, text us at 437-235-2849 or tweet me at anima_TK. I'm Tamara Kendacker, and I'll talk to you tomorrow.